Hey guys, just want to talk a little bit about something in the marketplace we want you to watch out for. Something you should watch out for is potentially maybe you should, if you're offshore, maybe you should sell your property this financial year, because if not, times could change forever. And the reason why is there has been a change in ruling with people that are offshore with capital gains tax. And it only came to me today when I was talking with the famous Emanuel Calligeros, our champion.
Yep, very good, thanks.
So Emanuel was doing just our routine books at Novak, and he was telling me about a bit of a change in the legislation with people that are offshore. Tell us about it.
Okay, Mark, what you've got is that people that were originally residents of Australia, and I'm talking about tax residents, and they may have lived in their property and have gone and worked offshore and become tax non-residents because they don't do tax returns here for salary income. What happens there is that where they may have lived in their property for up to a three-month period, and if not longer, had it as their own home, and then left and become a non-resident, in the past they could have had up to 6 years to return to that property or sell the property and basically have it exempt from capital gains tax. Now, from the 30th of June 2019, that's gone all out the door. So if you are a non-resident for tax purposes, and if you sell your property after next June, even though you may have been able to have the 6-year residency exemption, you will be denied that. And therefore you will pay full tax on any capital gain on your property, even though it was your residence for a time period and even up to 6 years. Therefore, need to look at what your situation is and what your tax position is if you're still offshore before the 30th of June 2019.
Wow. So just to break this down, you bought a property for $500,000 6 years ago. It's now worth $1 million today. You've been offshore for 6 years, but you lived in it 6 years ago. You potentially have no capital gains tax on that property for $500,000. But if you sell that property
after the 30th of June 2019, you will
tax.
Full tax, because it cannot be deemed to be your residence. The exemption is gone.
So for some people, it may be worth just selling that property, not paying that tax, pocketing that 500 grand, and then going out and buying another investment property for $500, $600, $700, $800 million again, and then they're not getting hammered for 250 grand's worth of tax or something.
Correct.
Wow. So guys, keep an eye out. It may not be you, maybe friends or family that have gone offshore for a short time, 3 years, 6 years or something, 10 years, and their tax positions completely changed because of our friends at the government. Normally they used to grandfather clause stuff like this whenever I've seen property taxes come in.
That's right.
They'll say, look, that's fine what you've gone up to, but from now on we're going to clip you, but that's changed.
No, it's a drop dead date. If you don't meet the date, or don't come back into the country and become a permanent tax resident again, you will be denied any exemption for your residence.
So two things. Talk to your accountant. If you need a good accountant, Emanuel Calligeros is happy to help you guys. And look at your position of tax with property. It may be worth getting in, getting out due to that. So hopefully we've helped you guys out there.
All right, cheerio.
Cheers.